Today we are going to talk about a stock that, quite frankly, Tyler saved me from a while ago. He talked me out of investing in innovative industrial properties. Ticker symbol is IIPR. If you're not familiar, they're known as the marijuana REIT or the cannabis REIT, depending on your terminology. They own primarily medical marijuana facilities and lease them to their operators. There's a lot of tenant risk associated with this, which has started to play out a lot in the past year or so. The stock is way down. And Tyler, it sounds like it's getting down to the point where it might be attracting your attention. Am I right on that?
As far as buying it, I wouldn't go that far yet. But from a valuation standpoint, it seems more interesting just to talk about, because when we were talking about this before, this was a fast-growing company that had a 2% yield, but at the same time there was a lot of risks being carried with that. You and I talked about credit quality or their counterparty credit risk. It's the idea that you might have some tenants who can't pay their leases, and some of that, like you said, did play out. They had a couple defaults. There are some that are still late on payments, and just the whole premise being that there might be some more dominoes to fall, because this is a very nascent industry. You have a lot of businesses starved for cash to grow their businesses because they're shut out of the typical banking sector. It's a large part of why Innovative's business model exists. But when you're taking on that risk with them being your tenants, you obviously run into issues, which is what they had, and a large part of why things have declined and gotten the stock has dropped as much as they had. But now if I look at it today, and I was just going on Koifen to look at some of its financials, right now it's more or less trading at its tangible book value per share. If I'm pulling it up right now, they're on their balance sheet. It's about $69.03 for tangible book share per value, and right now it's trading at $72. So typically, you and I, we look at real estate REITs a lot, and you don't see a lot of real estate companies trading that close to their tangible book value. Now, before we got on here, we kind of discussed the reasons why, and we could get into it if you want to, but things like depreciation, the cost of, what those things are actually valued versus how they're carried on the balance sheet. It's wonky. It's REITs. They're not like regular companies, right? But for it to be trading that low on a tangible book value, I can't say I'm interested in buying, but it has my attention because you don't see this very often.
Yeah, and there are two big reasons in real estate why you don't see tangible book valuations very often. Number one, you mentioned depreciation. All of the depreciation a REIT has accumulated over the years is listed as a liability on its balance, or it comes off the asset value on its balance sheet. And number two, the assets are recorded on the balance sheet at cost. So if a REIT bought a property, say in 2000 for $10 million, and its market value right now is $10 million, and its market value is say $30 million, it's still recorded on the balance sheet as the purchase price, not as the price minus depreciation, not the price that it's currently worth. Now, with innovative industrial, its properties are generally newer. You mentioned that its portfolio doesn't have a lot of depreciation yet because it's mostly new. And the market value may or may not be greater than what they actually paid for the properties at this point. So take it with a big grain of salt. This is a relatively new REIT, but I don't know what price. We'll close this out with what price would innovative industrial have to go to for you to really be interested in hitting the buy button?
Well, a couple things. It's not just the price. I would like to see just some more. I'd like to see some of the larger, more established, publicly traded tenants become a larger portion of its rent roll. A little bit more security in its credit quality. I think that would be a better sign for me. And my question that I have with this being trading so close to its tangible book value, I do have to wonder is there an assumption that maybe some of these are overvalued on the books? Maybe. I don't know. But those are the two questions I want to dig into, and I would want to see enough that I could be slightly intrigued to keep digging.
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.